Welcome back to the Daily Stack. It's August 1st, 2025. This is not financial advice unless your trading plan is watching candlestick patterns like Ratatouille critiques fine cuisine. Up today, Bitcoin's flirting near $120,000, Ethereum ETF inflows climbing sky high, DOGE whales in aggressive accumulation mode, firms raising billions for crypto treasuries, and a rule shift in U.S. policy that just energized the markets. Let's stack it.
Hold your bodies on your body, down to me. Yeah. Yeah. Markers on fire, flames in the ticker. Digits flip quick, wristwatch got thicker. Stacking sass, my wallet's the gym. Lifting heavy bags, yeah, I'm flexing them limbs. Shots looking wild, bulls on the loose. Bears getting trampled, no truth, no excuse. Stack it up, the daily stack. Coins in the pocket, no looking back. Stack it up, build that stack.
The market took a 4.8 to 5% dip, trimming the total capitalization to just below $4 trillion by early August 1st. Over $200 billion vanished in altcoin dumps and profit-taking across meme coins. Yet spot trading volume soared to about $145 billion. A reset, not a rupture. Red candles still stay crowded, but underlying momentum persists. Bitcoin lingered in the $118,000 to $120,000 resistance range, dipping to a low near $116,000 before bouncing back above $118. Market dominance held tight around 60.2%, with early rotations into altcoins suggesting the end of wave 1 and the start of the next week. Ethereum dropped 1.8%, retracing into the $3,790 to $3,900 range, flirting with $4,000 territory. Institutional demand remained steadfast. July posted over $5.41 billion in spot ETH ETF inflows, while ETH rallied 54 to 57% for its best month since 2022. Altcoins like BNB, Solana, and Avalanche slipped 2 to 4%, and ADA found support near 80 cents as on-chain whales clusters appeared. Low-cap tokens continued settling after their mid-summer run, but capital rotation suggests potential depth setups. Macro catalyst: the Fed left rates at 4.25 to 4.5%, dashing early hopes for easy momentum. But that was expected. The rollout for the White House crypto framework backing the Genius Stablecoin Act, Clarity Act, and new strategic Bitcoin reserve funded via seized crypto, not taxpayer dollars, offered clarity. That policy pivot lifted sentiment even amid vaulted yields. Institutional flows remain unwavering. Bitcoin and Ethereum ETFs captured $11.5 billion in July, setting records for both assets. That appetite pushed through red candles with bullish momentum.
But the one great thing about this is that for the first time now, the United States government has put its stamp of approval on a very key and important, potentially very important digital asset that will, I think, help to lower costs, lower risks in the market, because we can now move towards an instantaneous almost settlement, payment versus delivery for securities, thanks to on-chain stablecoins. And that will help, I think, innovation and to really get our markets, to be the best in the world.
The SEC's Project Crypto, rolled out by Chair Paul Atkins, establishes CFTC oversight on non-security tokens, along with clear paths for custody, staking, and DeFi compliance. Think of it as the U.S. crypto legal system being rebooted for scale. Alongside the White House, Policy Dossier formalizes crypto-positive reform ideas, including central bank digital restraint, stablecoin regulation, and explicit language supporting national Bitcoin reserve, though execution remains vague. Policy tone, however, shifted from tension to traction.
So I'm a believer in stablecoin, a believer in blockchain, not personally a believer in Bitcoin itself, but you're the customer. I don't like to tell customers what they can and can't do with their money. You can now move money from Chase to Coinbase. We're going to make it easier for people. They've agreed how to use our APIs, which we think is a good thing. So we'll be in it, and we'll see.
On adoption, JP Morgan and Coinbase unveiled a planned rewards to crypto feature for Chase cardholders starting in 2026, while PayPal deployed PYUSD in Brazil and Singapore today, integrating crypto into real-world payments. Blockchain metrics highlight institutional stacking. Exchange reserves for Bitcoin and Ethereum continue shrinking as long-term holders consolidate offline. ETH staking has surged 30.2% of supply. A squeeze is brewing. ETH futures open interest jumped to 7.85 billion, with funding rates normalizing after recent liquidations. Liquidations hit $217 million in the past 24 hours, including $46 million on ETH, signaling forced trim, not a full capitulation. In summary, macro headwinds caused generational shakeout, but institutional wallets were quietly loading the decks. Now let's get into the meme coin mayhem. Yesterday's meme market meltdown saw Bonk, Pepe, and Whiff drop 18 to 30%, pummeling weak holders, but Dogecoin bucked the trend with gargantuan whale stacking. Roughly 310 to 350 million Doge, or $1.2 billion worth, was scooped in 24 hours as Doge bounced from 22 cents to 23 cents, forming a textbook double bottom with aggressive volume. Analyst Kane predicts that if Doge breaks 26 cents resistance, then 30 cents is within sight, and whispers of a $1 AIM are gaining volume. Moonbull, or Mobu, a meme-born DeFi creature now offering governance, staking, and DAO utilities, saw a 90% surge in July. Liquidity and member expansion continue. Meme narratives are evolving. Real utility, real capital, real staking backbone. FOMO still crowds the room, but conviction funds the moves. Crypto treasuries are no longer filing footnotes. They're rewriting balance sheets. Over 98 firms raised nearly $86 billion this year to buy Bitcoin and other tokens. That includes toy makers, bike manufacturers, semiconductor firms, and French hotel chains, most of which redirect capital into crypto instead of operation. One Swiss firm, SYZ Capital, is reopening a Bitcoin Alpha Fund on October 1st to net $200 million plus. Already securing 1,800 Bitcoin from committed investors, institutional adoptions like this confirming crypto normalization. The corporate trajectory now pushes crypto from fringe narrative to finance infrastructure. And that brings us to the tip of the day. Red candles aren't crash signals, they're restocking zones. If you're in Doge or meme coins, scale your positions thoughtfully, not emotionally. For Bitcoin or Ethereum holders, this is basically just accumulation territory. Let the supply tighten as demand stays steady. Whale security reminder. Use only the official hardware wallet link in the description. Skip shady Twitter giveaways or Discord spam promos. Trust your cold storage, not social media. Stack smart, stack daily, and I'll see you DGens tomorrow.
Swing like a pendulum's blade. Fortune made fast, some quickly fade. Laser eye sharp, scanning the scene. Dreams of the moon, while it stay lean. Hash rate humming, block by block. Crypto's the wave, I'm surfing the shock. Auto through storms, dominant strong in this market jungle. I belong. Stack it up, the daily stack. Coins in the pocket, no looking back. Stack it up, build that stack. In the chaos, conviction, we on the attack. Bitcoin's birth to the meme coin's crown. Riding these waves, I ain't backing down. Bear ground fades, bullhorn sound. The daily stacks where legends are found.